money soldier. I thought I told you. Only rocking with the agent and the broker, yeah. Move over, we getting bolder. Making moves like the agent and the broker, yeah. Generational wealth, they bout that. Yeah, we took some L's, but we bounced back. Financial literacy, got that. Closing up the wealth gap, yeah, I'm black. Welcome to the Agent and Broker Podcast, hosted by Julian and James. And you know they bringing nothing but that black boss talk, man. Cause there's no currency stronger than the black dollar. And it's time we let the world know. But first we gotta grow though, and that's for sure.
Good evening, peace, everybody. How y'all doing?
Hope everybody doing good, man. What's going on, Julian? What's going on, everybody?
Yes, sir. I'm excited, bro. I'm excited, man. Welcome to another episode of the Agent and Broker Podcast. I am your co-host, Julian, the Agent, license W6266089, coming from Eatonville, Florida.
There you go. And my name is James Dennis, your license number W282336 down here in Florida. About to take it on tonight, man. I'm excited.
Yes, sir, man. I'm excited too, man. We got a dope guest, y'all. Finna cover. He's about to cover some dope topics. The infinite banking, man. Everybody's been going crazy about this infinite banking concept, and what is it? And people battling online. Is it whole life? Is it versus IUL? Is it all of this craziness and stuff? But he's gonna come and give you the proper education. We're gonna ask some dope questions, but guys, please submit your questions in the comment so we can ask them, and he'll be watching and seeing them as well. But it's gonna be dope. I'm excited. We have Brother Houston coming from California today, and he'll be joining us in a few seconds here. But I'm gonna let James, talk a little bit before we do jump into it.
Yeah, absolutely, man. It's such a pleasure to have him today as one of our special guests. We've been sharing the flyer for a while now, and today I'm very, very excited. And at the end of the day, like we always said, we're here to bring you content, to bring value, especially to a Black community, because there's a lot of stuff that's been they out on the table, but we're not seeking for them. So Julian and I will literally find a lot of stuff that's really, really important that we need to know, and along the way, we're meeting people like Houston that come here to tell us about infinite banking. Today we're going to dissect. We're gonna get to know him a little bit. You're gonna get to know how you can find him, follow his content. This guy is all about money and building wealth. So it's such a pleasure to be here, man.
Yeah, and before we tap in with him, I just wanted to give a brief, background on how I even found brother. I don't even know. I was online. I'm always searching online, researching. And I ran into him, I think it was maybe early February, like, kind of just a little bit after we launched our first or second episode. And I'm like, yo, he killing this content. And I'm like, okay, when it comes to this infinite banking stuff, I have courses and things, so I know the right information to look for. And when he was delivering the content, I'm like, yo, all right, yeah, he talking the right language.
Yep.
And it automatically connected. So I reached out. I'm like, okay, yeah. We got to bring him on the podcast, man. We got to get him introduced to our community so people can really hear it from another perspective. And the way that he educates it is beyond crazy, y'all. And I watched his Instagram. I promise when I followed him, he was around 3,000 followers. This dude has 11, maybe going on 12,000 right now. And that was in February. And by the end of February, he had that much. So he went from 3,000 to about 10 to 11 in 1 month. So I'm going to let him jump in here and introduce himself. So let's bring him on.
Hello. Can you guys hear me?
Yeah, perfect.
Yes, sir. Man. What's going on?
Perfect. What's going on, everybody?
We're blessed and highly favored, man. Good to have you, brother.
Yes. Well, before I say anything, I want to say thank you for even considering me to come on. And that intro song is fire, bro. That's nice. Yeah. I like that touch.
We appreciate it, man. Appreciate it. Yeah, it's fire. It's catchy, man.
I
like
used to be a rapper back in the day, so I had to lay that on the track, man. Now I'm just playing.
on,
That ain't me, man. That ain't me.
I hear you, brother. I hear you.
He's not lying about the rapper part though. He used to be a rapper. Now. Don't let him fool.
Oh, for real?
Yeah.
I know you don't look like it, man. That's another story, okay?
I got you. Hey, look, we all got our stories, you know.
There
Absolutely.
you
go. Yes, sir.
That's funny.
So, man, to kick it off tonight, guys, we're gonna bring them some questions again. Put y'all questions in the chat, comment whatever you want to ask, brother Hasani here. But our first question for tonight, man, introduce yourself. Really, who are you? You know, who you are, what you do, and let the people know. Break the ice here.
Yes. So my name is Hasani Houston. I'm born and raised in the Bay Area of California. So if you know San Francisco, like the Golden State Warriors, that area, that's where I'm from. And basically, I got introduced into the financial services industry back in December 2008. And the whole reason why I even came into the game was because of what happened to my father. I'm the oldest of three, and I thought that, basically my parents did everything right. I went to school, got to good grades, graduated. My mom had her master's. My dad had his bachelor's. But then something happened. My dad had a heart attack on the job. My family went from over $250,000 to $30,000 a year. My mom was in real estate at the time. She stopped selling house and nursed my dad back to health. And my parents lost their retirement. We lost our investment properties, and we were down struggling for our primary residence. And so for me, I was frustrated, angry, confused all at the same time, because I'm like, wait a minute now. I was told all my life, if I go to school, get good grades, graduate, get a good job, everything will be all right. And obviously that didn't work out. So I came into finances just to learn more about money, because there was a missing piece. I didn't know how to identify it at the time, but there was a missing piece that other people knew that I didn't know. And so I started in the business. And it's funny because I started in a business where I just learned about life insurance and all that kind of stuff. And I would say from December 2008 to about December 2012, to December to 2014, I heard of infinite banking, but no one could ever tell me what it really was. I don't know if you guys can relate to that, where you hear people talk about it, but then if you talk to other agents, they don't know how to describe it. They don't know how to actually tell you how to do it. Right. Or they'll tell you how it sounds, but they don't tell you how to actually set it up. Right. So I didn't start learning all that till after 2014. So that's the first lesson, y'all. I was in business from 2008 to 2014, and I did not know how to do infinite banking like I do today. And to be honest, I would say that I sharpened my knife when I started coming online, right? Because even then I knew, but by the time I came online, I had purposely inducted myself into more training and things of that nature just to make sure I was even sharper, right? And so, but basically, long story short, what I do, y'all, is I teach people how to open up their own banks. I teach people how to create legacies with their family banks. I teach people how to spend the same dollar twice.
Spend the same dollar twice.
We're going to get into that part.
Yeah, we're going to definitely get onto that part, man.
Because that part will fly over a lot of people's heads. They don't even know what you're talking about. Spending the same dollar twice. Like, what? What does that even mean? Yeah. But yeah,
for sure, man.
So Bay Area raised. So I lived in the Bay for a good few months, actually. Okay. I was over by it was somewhere by Hayward. I don't remember. Yeah. So I lived out there for a little bit, and then I got back into financial services when I came back home, because I went out there and I lost everything I had. So I'm like, okay, well, finances was the problem, so let's go into it. And that's where I met James. And, like you said about learning about, life insurance, infinite banking, but nobody can teach you about it. Nobody knew about it. Nobody could really, break this stuff down and how it looks. Nobody really knew. So I found the same thing online, digging online, getting online, seeing, finding the right area of education and things like that when it came to that, the concept, man. But we love how you market it and everything. So I definitely, I'm glad you were able to get on the podcast tonight, man. We really appreciate it. 100%. But for sure, like, so let the people know what is infinite banking, man, and about that concept and what it is.
Most definitely. So, to make a long story short, y'all, infinite banking is your ability to leverage your money with insurance companies so you can spend the same dollar twice. So, what that means is let's say you have 100 grand in your bank, right? In a traditional bank account, if you have 100 grand, you borrow 30, you only have 70 left. Okay. With infinite banking, you have 100 grand, you borrow 30, you still have 100 grand left. Not only do you still have that 100 grand, but it's also still earning interest. Not only is it still earning interest, but you have $30,000 cash in your hand that you could now flip and earn interest somewhere else and make work for you. So now, basically, if you want to be technical, you're earning interest on the same dollar twice in two different places. Oh, wait, there we go. In two different places at the exact same time. That's what's happening. And you're doing that by leveraging insurance companies to execute that and make it work.
Man, that's so powerful, man. And as we're speaking about infinite banking, right? And uh taking the term away, we use life insurance.
Correct.
I just can't get it off my mind that I feel like strategically it has been put on us to actually believe as life insurance as something bad, especially in our community. You know, when there's other community, they know exactly life insurance is a wealth building machine, you know. So with that being said, man, so using the same dollar twice, and as I'm going over the questions, I just want you to explain a little bit about the IRC laws and regarding the to cash value of life insurance. Can you elaborate a little bit on that?
Yes. Do you mind if I speak to the history of it before that part?
100%,
Yeah.
100%.
Because with you bringing up our people not understanding insurance, there's a reason for that. So
Right.
there is a type of whole life called debit insurance, where so we might not remember this, but our grandmothers might, and our parents and our aunts and uncles might. There used to be a man who would come and knock at your door to collect your grandma's pennies and dollars to put into life insurance. These type of insurance policies was intentionally pushed towards Black communities.
Right.
So, but the ironic thing about it was these policies were so they were what we call burial policies today. They were burial policies, but what they were sold as policies that could help leave a legacy. So you thought, okay, my family is going to be protected because number one, because if I pass away, they can pay for the burial. Number two, they'll have some money left over. So what was happening in a major scale was people were paying for these policies. So the two things that I saw us buy was the burial policies and the accidental policies. So now we're going to take that. Now we're going to freeze that in one time capsule. Then we're going to go to the next one. Then you also have where Black folks were actually putting money in banks. This is post Black Wall Street. Okay. You see where banks were getting locked up and frozen to where people's money literally were disappearing.
Right. During the Great Depression, right?
Exactly.
Yeah.
Exactly. Now, where did we have this the most? We like it. It goes without saying. So, in your intro song, you said we have a strong buying power. Well, we actually were responsible for putting money in banks. We did it collectively at certain banks. But what happened is those banks were attacked or shut down due to economic situations or local situations where racist folks will come in and attack it. So you have that. That's one traumatic experience. The next traumatic experience is when you talk about accidental policies and someone dies, the family doesn't get the death benefit all the time. So for those of you who don't know what accidental policies are, literally you have to die by accident. And the accident is described in the fine print. Now I'm exaggerating, but usually that means you got to die on the left side of a plane on a Tuesday at 2:00 in the afternoon. And if you don't meet those stipulations, you don't get paid.
Yep.
So the mistake was we had some of us buying accidental insurance thinking it was life insurance. Then the second part was, okay, we're buying these burial policies. And as time goes on and we start inspecting what we're getting, we have families putting in way more money than the policy was worth, right? Because we were loyal in paying it. So these little $10,000, $15,000 policies, well, what happens when you pay more than what the policy is worth? It becomes taxable, right? You run into problems with payouts. right? So all these type of things kept happening. Now, mind you, the insurance company never stopped collecting the money. They just allowed it to keep going. So I say that because now let's eliminate all of that. You also have where families were thinking they're going to receive X, Y, Z, not realizing that the policy was only for $10,000. So because they have no knowledge, they call in and they try to get more money. There's no more money to be. So now, and then from there, you have people investigating, saying, well, they're ripped off because they were sold $100 a month for $10,000 of insurance, but they could have got term for way cheap. So you have all that. So basically, what happens is you have more trauma in our community, financially speaking, from post-Civil War up to the modern era than any other group of people.
And the race baiting practices too.
Correct. Yeah. The debit insurance was targeted in our communities, and it wasn't made available in other people's communities, right? So we've been getting the short end of the stick. So and what that does is that conditions your mind to think of insurance 100%. A certain way.
Yep.
Right. So now when someone comes and talks to you about other opportunities with insurance, you stuck on, nah, my family had trauma with this. I'm cool. I don't want to deal with it.
Right.
So that's what I've learned. I've learned at first I was upset, but then I started learning to become empathetic because I have to understand that when you're dealing with somebody that dealt with trauma, you can't expect them to understand without giving them some kind of, I had to do more explanation. Let's just say more explanation. I didn't take it personal. But I went on a tangent. My bad.
No. We love it, bro.
That was perfect. That was perfect. Yeah.
Okay, good. Well, but to answer your question initially, you said talk about the IRC codes. So basically, life insurance is one of the only investment strategies out there that have IRS codes that were made since the inception of public taxes as we know it, right? Which is 1913. So there's 3 tax codes in particular. 72E, which allows your money to grow tax-free. 101A allows your money to pass on tax-free. And then 7702, which allows you to withdraw tax-free. Now, the reason why this is important is because now let's flip the pages one more time. This is the only vehicle that has all 3 tax strategies in one. If you look at traditional investment vehicles, they either have one of the 3 or 2 of the 3, but not all 3. One of the biggest mistakes we see that at is we talk about generational wealth and we're investing in IRAs and 401ks. And in our mind, we're putting our family as beneficiaries, and then we die and they don't receive the money.
Come on, man. You're preaching, man.
And if people say, well, Sonny, I put them down as beneficiaries. Yeah, but they didn't tell you that money inside that 401k can only go to your spouse tax-free. Anybody else, it goes through probate. It doesn't matter if you're a single parent, but I'll put my kids as a beneficiary. That's formality. That's not exception. That's the difference.
Bro, and if anybody ever go through a probate process, it's not
fun, bro.
It's not fun at all.
I have a family that wanted to get an infinite bank, and they said they're 2 years in on a probate process. And it has nothing to do with the family fighting. It's the attorney fees, the court litigation, like all this other stuff. And worst of all, now all your family business becomes public. That's public information.
Everybody's in your business.
Yep.
Let me tell you,
100%.
man, we all need to get educated about not only infinite banking, but also get our will, our trust done as well. Because it saved a lot of headache for the people we left behind, simply because this is exactly what you need to think. I'm a father of 2, right?
Yeah.
I need to understand that when I'm no longer here, or if I'm no longer here any soon, which I don't know when, right?
Correct.
I need to have certain things in place where my son, my daughter, my wife, everybody actually, it's pretty much you still be in control even though you're gone. When you have your will set up, your power of attorney while you're alive, maybe if you're in a coma, and then your trust to have all your assets in there. So I highly recommend you listening to this right now, or you watching this. Make sure you educate yourself about these things, because in our community, it's not done enough. So I really appreciate you going, over that. is very, very valuable information. But yeah, man, thanks a lot for answering that. But Julian, go ahead, man, take it away.
For sure, for sure. And breaking down those tax laws. And previous episode we kind of did an introduction on the codes, those laws, Tefra, DEFRA, and TAMRA as well, and breaking those down because we wanted to kind of loosen it up for when you came on. And because that can be its own episode, just covering those laws and getting people to really understand that stuff. So we wanted to break it down for them before you got on. And since you did break those codes down, when it comes to like the infinite banking, since the IRS and the Internal Revenue Code is backing it, how safe is the infinite banking concept, or the buying life insurance using the infinite banking concept? How safe is it to do? Since you said people have 401ks or IRAs and stuff, how safe is this vehicle?
That's a great question. So one of the things that I would encourage people to do is I would encourage you to go to Google and type in a term called BOLI, bank-owned life insurance. And the reason why that is because what you're going to do is you're going to see a setup that shows you where banks currently keep their invest their money. And one of the places they invest their money is life insurance.
Life insurance, yep.
See, but the funny thing is we're not told about that part. We don't get access to that kind of investment. So what the bank does is they take our money and then they invest their money, get their returns, and then they give us the pennies on the dollar. And so one of the things that I ask people is well, if you knew where the banks were putting your money, would you want to go straight there or still go through the bank? And so I say that because when you look in the detail sheets and you look at the definitions of everything, FDIC ranked all the money that banks have in life insurance as tier 1 capital. Tier 1 capital is considered the safest capital a bank can have. Well, based off that, if it's safe enough for a bank to have over $56 billion worth with the top 5 banks in our country, then it should be safe enough for any of us, right? And that's just on a basic level, not to mention that everything you look at around you involves insurance. If insurance companies were to go under, I guarantee you wouldn't be worried about your money, right? Because essentially insurance companies are the ones who are funding and backing almost everything that we're seeing and dealing with. So they're going to be the last domino to fall, which is why I say if they're going under, you ain't worried about your money. You worried about something else, right? But generally speaking, safety-wise, banks invest in it. Governments invest in it. Executives invest in it. So all these people with money, lawyers, and all these type of things invest in it, and they don't invest in it for a risk to be risk adverse. They invest in it as risk tolerance. In other words, they diversify their portfolio by putting money in there and allowing that money to accumulate wealth. Right? They're putting it in there so they don't lose money.
Right.
And here we are, automatically we're putting money in the bank. We're automatically losing money. Yep. Because of inflation and so on.
Right off top.
Oh, this is key, man.
Right
today,
off top.
I had some this gentleman came to my office today, and then we was just talking, and he came to look at a policy because he heard us talking about how your money can grow. So as he's sitting across from me, I have my pen and paper. I'm writing down for him, and you should see his face. He like, what? I'm like, yeah. And then when we're done, I run an illustration in the computer for him. Now I'm showing him numbers. He was like, bro, how come nobody explained that to me when I was in high school? That's nuts.
That's a great question. Question.
Let me tell you, man, we just have to go out there and go hard and explain to our community. Because these things, there is a reason it's not being taught.
Yes.
At a very, very early age.
Well, in reference to that too, what we could also look at is when people say, "Oh, I'm not worried about money," or "Money's not a big deal to me," you're losing already. Because so for people who say that, if those same people complain about the school system, they don't understand what system they're in.
100%.
The very school system we're dealing with today is because of people that have money that changed and influenced it. The Rockefellers, he influenced and changed public schools as we know it today, right? So when people say, "Oh, money doesn't mean that much," usually that's an excuse because they've been irresponsible, or they've seen what bad scenarios, so they label it to money overall. But we cannot allow bad scenarios or improper labeling to keep us from money. We need to embrace it, move towards it, understand it a little bit better because it's a tool. That's all it is. It's a tool. And if you don't know how to use it, it will work against you.
That's true. That's true. Now, I mean, we already 25 minutes in, man. I feel like we just got started. So let me just move on to the other question.
Okay, my bad. Yeah.
No, man. Like,
good.
listen. You good. Okay. Don't even
good, bro.
you're good. So if someone have a cash value life insurance policy, does it automatically mean like it's an infinite banking policy?
Good question. The short answer to that is absolutely not. Absolutely not. The main thing that sets up infinite banking is all about structure and funding. Structure and funding. I cannot stress that enough. The reason why I say that is because somebody's going to be looking at this podcast and they're going to be like, "Oh, so infinite banking, so it's whole life or IUL? Let me go holler at my boy. He does IULs." And then they get one and then it doesn't do what we said it does. And then they say, "Oh, infinite banking doesn't work." No. Your homeboy didn't set you up. You never had it from the get-go, right? So that's why I never say just because you got a permanent policy, you got an infinite bank. Absolutely not. Absolutely
so
not.
true.
That is
funny
100% true, man.
It's so funny. Like agents, man, oh my gosh, bro. Like I can go on for days about that and people not understanding that, that cash, just because it's cash value doesn't mean, there's certain things like surrender value that you got to look at, like all of these key things in the policy and then funding it in a certain way. So what would be the minimum you say that somebody can start and funding that?
That's a good question. In that sense, it all depends on what you want. Like if you're talking to somebody who says, "Oh, I want infinite banking for retirement," right? So they have it for the long haul. Well, then they can start with a smaller amount, because the smaller amount you start with, the longer you'll have to wait for the cash to accumulate so that you could access more funds. Because even though infinite banking is all about overfunding, there's only so much overfunding you could do if you're putting in $50 a month or $100 a month. You know what I'm saying? Like you don't have enough wiggle room. So the longer your goal is, the smaller the amount that you could put more that you could put as far as what you're trying to put in. The shorter your goal is time wise, the more money you need to put in. That's how infinite banking works, because infinite banking is about time, compounding interest, and is also about leverage, but you can't leverage something that you don't have, right? So I would say, now, if you want to get more specific, we could say somebody could do something as little as $500 a month, but they're committed to $250. So now they're overfunding their policy an additional $250, right? So something like that is a great start, because you're starting out the gate where you're overfunding your policy so you can have more cash value and things of that nature. Anything less than that, the wiggle room starts to be, a little different.
And I was watching one of your videos, and you kind of laid right. I mean, I like how you put it, where you said, if somebody don't have at least, or have the habit of saving at least $250, you can actually put yourself in a position for your policy to lapse. Exactly. Because if you don't consistently build that policy up and overfunding it, you may be shooting yourself in the foot. So I like how you also said, go ahead and try to save $250 every month, and at the end of the year you have $5,000. Come to me, we're gonna put that lump sum in for you. Then you continue to pay that $250. At the end of the day, if you were to lose not to be able to make a payment, you have that lump sum right there to kind of like balance everything out for you. Let me tell you, man, bro, like I was watching your content, man. It's like hats down. We love what you're doing. That's why you're here.
I appreciate that, family, especially
Bro,
coming from peers, because y'all in the industry, so
Absolutely.
y'all know that's
Yeah,
different.
100%.
There's a lot of misinformation, man. There's a lot.
lot of-
like,
Facts.
a lot.
Facts.
Too many buy-term invest the difference out there.
Oh, yeah.
I ain't throwing no
yeah.
shots, bro,
It's
but
a
too
lot
many
of that.
buy-term.
The other side,
The other side, man. Come on,
lot
bro.
of
Oh my God. Oh my God. So and see, the thing is, anybody who's part of that community, I can show them the flaw in what they're talking about. I can show them how infinite banking, a properly structured IUL, is superior. I could break all that down, and I can get into the fees, and I can get into death benefit, because all that is just anyway. If they want it, you can hit up my Instagram at HZHouston12. I'm not afraid of that, because
there you go.
there's too much. There's too much to be said that people don't know about. But anyway,
right, and it's not being taught. So you
Correct.
have people running with Dave Ramsey methods. You know what I'm saying? Like
right.
They try to argue you down, and it's like, bro, if the government is doing this, if presidents are doing this, there was like information where presidents were putting it in. The head coach from Michigan put his money in policies. Correct. Like so many people are putting money over here. Why? There's tax shelters. There's you beating inflation, like market volatility. Mm-hmm. So people not really understanding, like you said, the full concept of finances and why because of that miseducation of that and that trauma as well in our community of what life insurance is. Like it's deep, man. It goes deep. So what would you say disqualifies people from opening their own bank, or they're getting their own policy and stuff? What would disqualify them?
Disqualifies criminal record, health, driving record. Those are the big three. Mm-hmm. Because I've had people that's had a clean criminal record, had a good drive. They had a clean criminal record. They had decent health, but their license wasn't up to date. Like they just let their license lapse for whatever reason. Oh, I don't need it. I don't use. Nah, you need it with insurance. And so running into that, or not having an official government ID. Let me say that. So whatever could be an official form of a government ID is important, because so that's important. Now, driving record is, as you all may know, because they're looking for DUIs, they're looking for wet and reckless, they're looking for all those type of things, because at the basis of everything, like James said earlier, this is life insurance. So what that means is the insurance company has to assess the risk that they're taking on you. Right. So therefore, they're going to check your health. Therefore, they're going to check your criminal record, and therefore, they're going to check your driving record, because those are the big three when it comes to risk assessment.
100%, man. You can't go around that. I remember I was doing a policy for somebody. So everything was okay. Put the policy in, great, and then we get the denial. Come to find out, she had a ticket, right? Yeah. But she actually moved, and her license was not active. She didn't even know that, right?
Yeah. A lot of people don't.
A lot of people don't know that. So it's the thing that the insurance company look at, like you are a risk. And I was explaining on the other episode where I had this other guy. He got denied. He had a good record, driving record. He was in good health. Everything was good with the guy. He got denied. Come to find out, they said this guy never lived in one address for more than 2 years. He keep moving and moving and moving.
You're a risk now. Yeah,
you a risk.
No stability. No, and banks look at that too. Like a lot of people, when it comes to lending to you, banks look at your stability, where you're living. If you're living in multiple places, like, nah, I'm not lending you the money, because you could easily take the money and run away.
Exactly. And another perspective on that. So for my family that out there that is healthy and you don't go to the doctor, you're doing yourself a disservice. Sometimes what you want to do is go just so you can have a paper trail of your health. Does that make sense? Because if you don't have a paper trail of your health, they have nothing to go off of but your word, and quite frankly, they don't care about that. So what you always want to do is create a paper trail of your good habits. That's what I try to teach people. So even though you don't have a primary doctor, show a record of you going in just so someone can say you're healthy. That way you can qualify for more stuff, right? That's one. Then two, let's say that, you know what, the doctor prescribed me this medication, but I don't need that, Hasani. I'm strong enough without it. That's totally fine. Go back to the doctor and prove to and number one, prove to them that your numbers got better. Have them submit it in writing. Don't have them tell you on words. James, you're doing better. Your health you're looking good. You haven't been taking medicine? No, I haven't been taking it because, I just been working. Well, you know what? That's good, James. Nope, that ain't good enough. James needs to tell me as a doctor, hey, well, you know what? I appreciate that, doc. Could you put that in writing? Put that in writing for me.
Yep.
Right. Well, James, why do you need to write? Well, I just like to make sure that I can go back and trace what I've been doing and how I've been improving. So just go ahead and put that in writing for me.
Yep.
Because some of them might get uneasy just because you ask them, because they're like, well, what are you trying to do? Just let them know you're trying to keep track of your health. That's all.
That's key, man. I'm glad you bring that up, because that alone can be the turning point of you getting a policy that's like graded, or a good, a standard policy. That
Correct.
right there alone can make you qualify for an extra $50,000, $60,000, $80,000 for this same price, because you have that on paper. Because the moment the life insurance company said, hey, we see XYZ on your record, and you be like, whoa, time out.
Right.
I'm gonna send you something real quick, so I can challenge that. So when you send that letter from your doctor and he has the signature on it, that right there can actually have you have a better policy where you're paying less money or have more death benefits. So I'm glad you actually said that. So moving to our next question, man. By the way, so far, man, I think you're doing an amazing job elaborating on these concepts. Don't think that you're cheating off the time. We want you to go and put your heart out there, because there's somebody listening to this right now or 20 years from now that's going to make a good decision based on the explanation you're providing. So just want to say we really appreciate you, man. So the next question is, man, let's talk a little bit about the IULs when it comes to IUL versus a regular whole life, So I want you to get in a little bit into there, shine some lights. IUL versus whole life. Some people would say, well, which one is better, or aren't they the same thing? So take some time and, elaborate on those for us real quick.
So what I would say is what a lot of people do is, so what I found is that when people research infinite banking, they get the book, Becoming Your Own Banker by Nelson Nash, and they're like, oh, well, do you have a company that pays dividends? So my response to them is no. And there's a reason why. Nelson Nash's book is a phenomenal book. It's the book that started the infinite banking wave, but it came out when whole life was basically the creme de la creme, the only product that could do it.
Right.
So what you got to understand is, in the marketplace, whole life has a savings account, and then you also have dividends. So the dividends is usually a guaranteed rate of 3 to 4%, and then you have the dividends of the company that'll pay out. So I would say that on average, you're looking at an additional 4 to 6%, right? And that's being very, very nice. You got to find some damn good whole life policies to make sure you're performing over 8% on a consistent basis. But the main thing is, with whole life, you're usually going to be capped on your earnings. And what I mean by that is usually dividends aren't going to pay out over a certain amount. And the reason why is because, I don't know the reason why. I'm not going to say nothing to that. But my point is a lot of times, based on performance and historical evidence, you're looking at whole life policies on average that are going to perform less than 6%. Okay, less than 6%. So, and that's where you have all these other people talking about, oh, well, it's trash, it doesn't work, whoop. So what happened with whole life is, when it first came out and people were utilizing it for infinite banking, you got to understand the marketplace was completely different from what it is right now. You were able to put money into a whole life policy, but you can get $50,000 or $100,000 worth of insurance and put $500,000 cash in, and then borrow against that $500,000 cash and go do whatever the hell you want to do with it.
Mm-hmm.
So based on that, you're earning interest and it's tax free, and you could borrow against it, and you can still pass it on to your loved ones tax free. So people were abusing it. They was like, this is awesome.
Right.
The fixed accounts were a little bit higher back then as well, because the fixed rate, there was a time where you can get 12% in CDs, in bank CDs, right? So with whole life back then, the fixed rates were a lot higher. So people were making money. The insurance companies paying out more in dividends. People were making money. So based on that, whole life was good at that time. And then, of course, the industry changed. So they had to restrict, or I don't say they had to restrict, but basically the policy became more restrict. Here's the biggest complaint that people have with whole life. It costs too much as far as cost of insurance.
Mm-hmm.
And you didn't earn enough, because then later on what ended up happening is, yeah, you could earn that 4 to 6% after the regulations, and that's where you guys talked about the TEFRA and DEFRA laws. Mm-hmm. Those laws came out because now whole life had to meet a guideline to where it had to be structured for insurance,
right?
And you couldn't put all the money in all at once.
Mm-hmm.
Well, then based on that happening and people still getting 4 to 6%, folks started looking at other areas to put their money. So once they started putting their money in other areas, whole life started getting a bad rap and all that other stuff. And what I'm talking about is whole life specifically for investing purposes, not the whole life for the barrel policies and all that stuff. Mm-hmm. So long story short, with whole life, the benefit with whole life is you could access your money in no time. You could you could treat it like a bank account, right? And basically what ends up happening is people were putting their money into these accounts. You can get access to them in under 30 days, especially if you're dealing with the right insurance company. So whole life was awesome for that as far as liquidity is concerned, but the returns were average to moderate. Index universal life, on the other hand, came out later on because people complained about cost of insurance. People complained about not earning enough money. So the insurance industry did what any other business person would do. They made a revision of the product.
Right.
So they revised the product with universal life. Then after that, universal life was getting about 6% plus, but it still wasn't good enough for people because they were making more in their 401ks and IRAs. So then they came out with variable universal life, right? Variable universal life was basically a 401k. Basically, it was a Roth 401k. That's basically what variable universal life was. But you could lose money. Then the stock market crashed. And when the stock market crashed, people were up in arms. I lost all my money inside this insurance policy. It doesn't work, yada, yada, yada. So the last revision was an index universal life. Hence the word index. What that means is your money is going to be tracking an index like the S&P 500. Now, the benefit is when the market goes up, you're going to earn with the market. When the market falls, your account's going to lock in that value, guarantee you don't lose a dime, and then when the market goes back up, you earn with the market again. Now, those same companies also have guarantees at a minimum, where if the market falls, you can get a minimal return, and then when the market goes up, you have a cap, right? So now you're averaging, let's say, 8 to 10%. So now you can get a higher average. And the only difference when it comes to well, not the only, but one of the differences when it comes to index universal life versus whole life is the liquidity. More times than not, whole life has more liquidity. There might be individual companies. See, at the time of me making this, I could probably think of 1 or 2 companies off the top of my head, index universal life companies that will let you have liquidity comparable to a whole life product, right? But in general, index universal life has you wait 6 months to a year. In general, not all, right? Whereas with whole life companies, there's companies where you can put the money in and take it out the next day, right? So a lot of people love that. Now, the thing that I like personally is I work with index universal life companies that have no cap. So that means that the market does 60+%, I'm taking it home. Absolutely. That's number one. Number two, I like the fact that I can customize how fast I could max fund my account and mature the policy. In an index universal life, you could do that in 3, 5, or 7 years. Whereas with a whole life, it has to be 7. There's no negotiation.
7
right?
pay period. Yep.
Exactly. That's where that comes from. So you have the 7 pay. or it could be more. But my point is, you can't do it in less. And so basically, the way I sum it up is whole life is generally, and this is generally speaking. Obviously, there's individual companies that have differences, but whole life is more liquidity, less return. Index universal life is less liquidity, more return. So it's based off your preferences. Me personally, I like the return, right? So that's what all my money's inside of index universal life policies.
Absolutely.
100%. Wow,
Same here.
that's well
Same
well explained,
here.
man.
Yeah, that was great. That was a lot of gems in that, honestly. Breaking down the whole life in the IUL. That's something people argue about all day online. I'm like, yo,
It ain't worth the argument.
it's not. It's really not. And there's people that wanted to argue me. I'm just like, man, look at here, man. I ain't got time for that. You know what I'm saying? Like,
right.
I'm just gonna do. We just gotta show in the long run. You know what I'm saying? Like, we just show what the policies talking. Like, and that's really what it comes down to in those policies and the performance. And like you said, that uncapped stuff, that whole indexing part, that's a whole nother episode. You know what I'm saying? Like, that's something you can cover for hours and hours of learning
I don't
that
know,
stuff.
like, man, what you're saying is crazy. For the listening audience out there, this is not an all the time return, right? I'm not going to say that, but what I am going to say is there have been returns where if you look at in the inception of COVID, March 2020, then we go to March 2021. Look at what the market did as far as performance wise. It was about 60-70% return. In an IUL, you took all that home.
That uncapped strategy, man. And then the next year, what? In the next year, you get to build off of that. And if the market go down, you keep building off of those years. So it's like people have to lose, and then they gotta take time to catch up.
Yep.
But
For
now
me, that's a no-brainer.
Yeah, you got the lock-in gains. Like that's that right there alone is just, man, that sells it all. Honestly,
absolutely,
for the IUL. So when we talking about, let's kind of get into, things that you can start doing with your bank now that you have your bank open. So we got our bank open. When it comes to going to buy something like a car, like how can you explain to the people when it comes to financing a vehicle or things like that with their bank? Is that possible? How would that work?
Great question. So one of the things is we did a webinar where we talked to people about how to buy a car with your Infinite Bank. You have two ways to do it. One is you have all the money already. So let's say you start with a used car. You like, Hasani, I don't have $30,000. Okay, fine. Let's start with a used car for $10,000. You have the $10,000 in your Infinite Bank already. Or let's say you have $15,000. So you have $15,000 in your Infinite Bank already. What you're going to do is you're going to borrow $10,000 from your Infinite Bank, and you're going to use that to purchase a $10,000 used car. Then from there, what you're going to do is go to Google and calculate how much would your payment be and do it based off your credit, all that. Like, act like you are borrowing money from Chase, right? But now, instead of you paying that money back to Chase, you're paying it back to your insurance policy, i.e. your Infinite Bank. So now you do that.
It's golden.
Why would you want to pay yourself? So the biggest question that I've had people ask is, they say, well, why would I borrow money from myself? And why would I pay it back? Very easy answer. If there were two of you doing your current job today, could you get more done? If the answer is yes, that's why you would borrow from your own money. Because when you borrow from your money, basically what's happening is you have your money working in two places at the exact same time.
Right.
That's it. So now, why would I borrow money? The same reason why you would borrow money from your 401k, the same reason why you would borrow money from your stocks, the same reason why you would borrow money from your crypto portfolio. The difference is because you're utilizing insurance. One thing you can know. Let's say you miss a payment because life happened. It won't show up on your credit. Let's say you're not able to pay everything back right away. You control when and how. Right. So for me, I love the infinite banking option because it provides. So we all heard this saying before: own nothing, control everything.
Mm-hmm.
But what are we doing to implement these strategies to actually execute on that? Infinite banking is one of the ways that you can execute that because you have the ultimate control. You control the payback period. You control when you pay it back. You see what I'm saying? You control if you borrow against it or not. No one else can deny you or dictate if you get access to the money. You have absolute control.
Right.
So basically what happens is you pay yourself back. The concept is if you pay yourself back, you make more money. If you don't pay yourself back, then the insurance company will take the difference from your death benefit. So when you buy the car, what you're doing is you're going to buy the car and then pay that money back to your insurance policy, and then you're going to make money on that. Now, because you made money on that, now when people get confused when I say pay it back, you borrowed 10, but you still have 15 accumulating wealth in the account. So let's say that as you're paying back money to get to replace that original 10 that you borrowed, the insurance company is treating that as new money coming in. So what that means is it's compounding on top of the $15,000. That's the exciting part. So that's why you make more money. So now that money will catch up. Now what happens is, let's say in 3 to 5 years, you accumulate some more wealth, and you say, you know what, I'm good now. Trade in your used car, get a new car, do the exact same cycle again. But now it shouldn't have to cost you as much compared to how much you have saved because you traded in your car for part of the value, and you still have a bigger lump sum that you can pull from. Now you can do a $30,000 car. Then you go ahead and go through that cycle one more time. Now you bump yourself up to a $60,000 car. Then you do the cycle one more time. Then you can bump yourself up to a $100,000 car.
Look at that. No credit check, y'all. Look at that.
No credit check whatsoever.
You got to find that.
Look, I've even had some people go as far as asking me if we could put it on their credit since they're the ones dictating if they're doing good payment. Yeah. I said, well, let me tell you this. If you can, that ain't my wheelhouse. So I met a brother who was telling me how teach me how to file what do you say, UCC statement where basically it'll show up on your credit. Now that ain't my wheelhouse, y'all. I don't do that. But when the brother gave me the idea, I said, you know what? I don't see why that would be a bad idea. Yeah. Right. But I don't know. I'm just going to go ahead. That's a disclosure.
So do your own research pretty much, you know?
Yeah. Pretty 100%. 100%. Man,
but
the whole key of this is everything is private. Right. Everything.
Wow. It doesn't affect your credit. Everything is you have 100% control on the whole aspect of it. That's what we want. That's dope, man. So speaking of cars, and the next question will be kind of like similar to what was asked, but towards real estate. So how can this benefit people in real estate, would you say, as an investor or something?
So if you're an investor in real estate, one of the biggest questions I ask people that invest is I say, before you come up with your deal, where do you hold your money? In a bank account. So if we could take the money that's in that bank account and earn more interest on it, and you still are able to do what you want to do, are you open to it? If they say no, they're just being what's it called? Antagonistic. Because if I'm a real estate investor, that means I know how to calculate numbers to make money. Why wouldn't I want my money to make more money for me? See, the biggest mistake that I found when people hear about infinite banking, well, Hasani is only earning 7 to 8. I had somebody talk to me about that today. It was only earning 7 to 8%. I can make more money than that on my deal. You're not getting it, brother. I don't care if you can make money on your deal. I'm not here to compete with your deal. I'm here to enhance your deal. Because what if you can make money with your deal and here at the same time? Because currently today, with the way you're operating, your money is being held by Chase, and it ain't doing nothing
at all. At least not for you.
Exactly. So if it ain't doing nothing for you, why not move that money, right? So the exact same principle applies. The question I want to ask everybody is not only, so now you have 100 grand in your account, you borrow 30 to invest in a real estate property. Not only can you invest in that property, but you can also start becoming a hard money lender, where you control the whole transaction, where now you have the deed to the house, you own the property. So even if you hire a contractor or the investor to go out there and flip it and sell it, and they try to do something to ice you out, you got the property. You got the property, right? At least in my research, that's what I've seen. If somebody sees something different, you let me know. But the key is when you're doing that, you're becoming a hard money lender. The whole key is make sure you have the deed, right? Make sure you have the deed. And now you control the deal. That's all we want, right? So then people start coming up to you and finding you to borrow money from your account to finance their deals, and then you just collect your interest.
It's a no-brainer.
Really,
that's it.
It's a key, man. This in real estate goes hand in hand, honestly.
Yeah.
Yes, it does.
It's like you said, you're not here to compete. Like, I'm here to enhance what you have.
That's
and most
it.
people would be like stuck in their ways. I've talked to real estate investors who it's not familiar to them. So they, they feel like, oh, I've made my money in real estate, so that's what I'm used to. But this strategy, man, honestly, like when we get these clips and chop them up, I'm happy about this this episode, honestly, and getting it out to the people. But kind of going to the next question and everything. Before we do, wrap up tonight, I had another question it's actually from one of our guests here, St. Louis Gene. He wanted to ask you, have you used the Infinite Bank when it came to for business acquisition, so to purchase businesses, and how does that work?
Absolutely. So the same principle applies. All that's going to happen is you have $100,000, you borrow 30 so that you could buy equipment to expand your company. Same principle. You just call the company, you dictate how much you want to pull out. They wire to you in 3 to 5 business days. Now you go ahead and execute on your plan. Or you see a property, or you see another business that you want to buy out altogether. You can utilize your Infinite Bank to finance the buyout deal, right? So the same rules apply. Basically, you look at how much money do you have in your account, and then you borrow against it to go ahead and do that. Now, mind you, while we're doing all this borrowing, how much do you pay in taxes? Now, if you don't know, here's my second question. Here's my follow-up question. How much taxes do you owe for a loan? And most people are going to say nothing. So I hope you guys see what just happened. That's why you borrow from yourself. You don't have to worry about no taxes. Well, that's one of the reasons why, I should say. That's one of the reasons why you would borrow from yourself, because now you're leveraging your money without paying taxes, and that includes the interest that you've accumulated in that account.
Wow.
Powerful.
Wow.
So no, absolutely. We definitely want to use that to buy businesses, expand, grow, all the above. Absolutely.
Jeez. This is golden stuff here, man. And let me just remind you again, this is life insurance.
Correct.
We're talking about interest, compound interest, making money. At the end, like in the same token, you have a death benefits, you have living benefits, death benefit transfer tax-free to your beneficiary if you pass away, to pay all your debt and so on. Living benefits, if you were to get very sick with terminal illness, chronic illness, critical illness, you have access to that as well. Hundreds of thousands of dollars, if not million, depending on how much you can contribute into the policy. Plus, we're talking about 6-8% return compound. So it's all in one. It's a no-brainer. So as for my investors out there, why would you want to keep borrowing money and pay all these high points when you really can make your own bank, borrow from yourself, and pay no points at all?
But by the way, let's talk about that. We talk about paying high points. You might have some folks out there that are big on credit, right? I don't care what you do, we can find a way to combine it with infinite banking. For the credit folks out there that do manufacturer spending, well, you don't have to look that much further. I mean, you can use a credit card to finance your infinite bank, and then you actually would have the cash that you could borrow from to pay off your credit card. Now you got the points, you're traveling for free. And then you pay yourself back whenever you want.
Or to even go to retirement. You can fund your retirement with the credit. Come on, it's a lot you can do.
Exactly.
It's unlimited, man. It's crazy.
The main thing I tell people is, if you want to understand infinite banking, understand the concept of leverage. If you understand the concept of leverage and what the benefits you can get from leveraging, then infinite banking will make all the sense in the world. Because I could go into everything's going to be tax free. You control the borrowing, no credit check, no rejections, tax-free accumulation, tax-free withdrawals, tax-free death benefit. Like, I could go into all those features, but it won't mean anything if you don't understand leverage.
Yep.
You see what I'm saying? That's why I don't talk about features too much.
Right.
Because most people don't understand how those features can relate to them. I have a client, for example, I have one client who's going to be using infinite banking for retirement. So they cool with the option of just retiring, and then they might borrow against some if they decide to get a beach property. They have the right to do that because they're accumulating wealth. All we want to do is provide people with options and control. That's all I want. Options and control.
Got the options for you, baby.
You know what I'm saying? That's
you know
it.
what I'm saying? Like,
that's it.
It's the Swiss Army knife, bro. Like Doug say.
100%.
It's the Swiss Army knife, man. You got everything all in one when it comes to financial vehicles. This has everything you need in it.
Yep.
And you can literally sit on this one, like, honestly.
When I sat down with somebody and they told me that the Rule 72 worked in their policy, I said, wow, I need to learn, because I'm missing out on something, because the Rule 72 didn't work in my policy like it did in yours. Something's wrong here. That's like, when I heard that, I was like, I need to learn. And what that means, y'all, is the Rule 72 says if you take the number 72 divided by the interest you're earning, that'll tell you the number of years it takes for your money to double. So if you have 7% interest and you divide that by 72, well, then that means your money should double within 10 years, right? So basically what I heard this person say is the Rule 72 has been working for them, and it ain't been 7% interest for them, it's been 10%. So they flipped it. Their money was doubling every 7 years. And I was like, how? And basically because they understood how to maximize the cash value to earn more when the market is going down and up. Number one. Number two, they understood how to leverage, the power of leverage, of how they could manipulate the account without spending the principal. And then number three, because they took advantage of both of those at the same time, the momentum just took care of itself. Right? So that's what I was saying.
Man. It's like there's nothing you can think of you cannot use this policy for. You can use it for everything and anything, man. You know, so as we wrap up, we heading towards our last question. And I know it's gonna be the same concept, but one of the reasons we put that on here is simply because you did a short video and you actually briefly spoke about that. So we wanted to ask you,
we from the South, bro. So
we're from the South.
This question right here, man, like this go heavy where we from, man.
It's for all my people out there, and including my people. I'm Haitian, by the way. I know you can hear the accent.
Yes, sir. Yes, sir.
Let me tell you, man. When it comes to churches, brother, tell us, man.
Religious organization.
How could the religious organization benefit from that?
Okay. So check this out, you guys. Earlier I said we got to understand the power of leverage. Okay. So what is the biggest concern of the church when we're talking about taking care of the church's money? We don't want to lose it. So if we don't want to lose our money, then we could put our money in accounts where they have guaranteed bottoms of 3%. So now you're guaranteed not to lose, period. You took care of the first concern of the church. Right. The second thought is, because see, I ran into a lot of churches who talk about, oh, well, we don't want to do anything else with it, because I said, but wait a minute now, you go and tell me I got to be a good steward over my talents, a good steward over my money. Right. Does that not include the church? So now what happens is for those who saw it, because I've been in an environment where we had a building fund and that, it wasn't working. or let's also be honest, some of the churches are depending too much on their people giving to them.
Mm-hmm.
Okay, they're depending too much on it. So in other words, what if the church could find other ways to bring in more income, but not just so that because, by the way, you earning interest, that's legal. You could do that with a church. That's not illegal. They will not strip your nonprofit status just because you earn interest on money that you're saving, right? There are certain businesses you can't get involved with, but earning interest is not one of them. So basically, here's why I say that. When it comes to a church, the idea is the church becomes a bank where you raise $1 million between the congregation and yourself, right? And you put that $1 million into an infinite bank over XYZ amount of time. So let's say you fund that $1 million over 5 years. So if that's the case, then what is that? 200 grand a year? 200 grand a year over 5 years equals $1 million. You funded it like that. So now there's $1 million in the church bank. There's 3 things that people need to understand of how to control this. The owner, the insured, and the payer can be 3 different people. Now, the owner can be a living, breathing person or a corporation. What are churches? They're corporations.
Absolutely.
So the church as an entity can own the account. Now, based on you setting it up that way, guess what happens? Just because I'm the insured on the account, I don't have right or access to the money. Does that make sense? I don't have the rights or the access to the money because I'm only the insured. The church as an organization can dictate who has right to the money because they already do it anyway. When they're raising, if they already have the money, they already have, no one can get access to money without X amount of signatures. That same rule could apply with the infinite bank. Okay, so we got the owner, we got the insured. The insured is going to be the healthiest in the congregation so that the church can receive the benefit. All right, so now you have the church being the owner, one of the healthiest members of the congregation to be the insured, and then the church can also be the payer. Now, what that means is if they're the payer, the church also becomes a beneficiary. So why would this be important? You can set this up where now, because there's a term called COLI, C-O-L-I, corporate owned life insurance. So now when the church has the insurance or basically has a bank set up, check it out. Now they can go ahead and say, all right, we have $1 million in the name of the church. Now the church can fund business ideas for the congregation. Now the church can be a cornerstone of creating wealth within the community again, right? Because there was a time when this was huge.
Right.
But more importantly, if the church can gather this kind of income or this kind of money, now we don't have to choose between righteousness and money. This is the value that I saw, because how many times have we felt where, you know what, I want to do right, but the bank says I have to qualify for XYZ. So now you feel, you see what I'm saying? This is where you're participating in the world when you're going through the banks and you're going through the rejection and you're going through all these other things. You're acting in business a whole nother way. If the church is the bank, you're in the world, but you're not of the world. In other words, you can start putting stipulations on how kingdom-like are you to deserve this money. So now we can start promoting more good acts in the community because the church is in control of money in that sense, and they're using it to promote better health, and when I mean better health, I'm talking about spiritually, like better actions, better thoughts, better. Don't just go into business just for the sake of making money. Now you can marry righteousness and the tool of money to go out there and do more good because the church has the money to say so. You don't have to worry about the bank saying yay or nay. The church is dictating it now, right? Now, some people could still say, well, that's too much power and things of that nature. Then don't go to the church that does it. That's my say, right? But my thing is, a lot of these churches are already doing it anyway. Guess another thing that you could do? You could also create a pot where, because I've been in the South, drive 5 blocks, you're going to see 5 churches.
Oh yeah,
right?
It's the
And a
truth.
lot of them are
Yep.
small.
Yeah, absolutely.
You could create a church bank, a church community bank, where all those small
Mm.
churches invest into one collective one, and then they start buying back the blocks they live on.
Come on, man. You talking? Man. You preaching? Like
You see what I'm saying?
it's
And then if
Bruh.
they're buying back their own blocks, well, now we can start putting things in place where there's less crime, there's less drugs. We're employing our own people. We're stewards of our people. We become the shepherds of men. You see what I mean? So anyway, that's the kind of stuff that I be thinking about, because a lot of people get nervous, and I'm like, no. We already have bad examples when it comes to money.
Mhm.
What if you had money? What if you were the person that was rich? What kind of impact would you make? If you don't ever take the time to think of it, then you'll never make that impact.
mm.
You'll never make that impact. So if anybody's a part of any religious organization, a mosque, a church, a synagogue, whatever the case may be, my challenge to you is to listen to this and then think to yourself, what good could you and your church do in the community, or you and your religious organization do in the community, if you were to be in control of your own money? That's my question, right? Now, I know that we know a lot of Christians and things of that nature, but I want to give one example. Whether we agree with it or not, the Nation of Islam was a great example of this, right?
Mhm.
I'm not saying that they created their own bank through insurance, but what I'm saying is they found a way to finance themselves collectively.
Right.
And
Mhm.
through them financing themselves, they implemented programs within the community that improve the community.
Come on, man. The Mormons do it too. I lived in Utah. The Mormons are
That's
freaking
true.
crazy with it. Like they run
Very
their
true.
entire state off of it. I wouldn't be surprised they have church-owned life insurance. Like I wouldn't
That's
be
very, very
surprised. No
true.
lie. Like it's crazy how the
There's a
collective,
reason why.
the unity works like that. Go ahead.
Exactly. There's a reason why Utah is a finance capital, right?
Mm-hmm.
And when I say finance capital, you have a lot of insurance and investment
Insurance.
professionals
That's
that have
true.
come out of there that also
Yep.
belong to the church.
Mm-hmm.
So, in other words, people are doing this already.
Yeah,
Our community's just missing it.
that's it.
Our community's just missing it. Now, here's the other thing. But Hasani, what if the insured runs off with the money? They can't. If they run from the church, that means they left insurance, and we can still use the insurance. We can still use the cash, right? If you want to set up money to where a pastor can get retirement, well, you can set up an infinite bank for the pastor and then make the church the beneficiary. So after he uses the money or does what he does, the money goes back to the church again, and then you guys start all over again.
Yeah.
But you don't start from the beginning. You start because you left a seed and it produced a fruit, right? And the church was blessed based off being a blessing to someone else.
Mm.
Just that simple.
Dang, bro.
Just
That's
that simple.
game right there, man.
That's major, bro.
So when we talk about creating religious banks, y'all, it's not for the private greed of it. There are stipulations that you will need to put in place to make sure you guard the greed.
Mm-hmm.
But I don't think that's hard, because most people are doing it already, because most of these churches are already raising money.
Yeah.
A bank won't change that. What a bank will do is allow them to leverage money so they can go out here and make more of a difference. That's what I see. That's what I see. If I'm naive for it, it's okay. I'll take it, right? But again, we just got to think on different levels, y'all. And then let's take it one more step. Let's take it one more step since we're talking about it.
Yeah.
Eventually, we need to go ahead and start having churches invest in our colleges. So if a church becomes a bank, then the church can start giving to the colleges. And now, by the way, endowments are tax-free. So now you're creating another circulation of tax-free income. And then that church can start sending their children to those colleges with the expectation of learning X, Y, Z things, and then bringing that talent back to the church.
Ooh, give me the chill, bro.
You see what I'm saying?
Dang.
The church is its
all
own
right.
city, its own community.
Oh yeah, absolutely. How it should be though, right? And like that's how
Correct.
it should be ran.
Correct.
And this infinite banking concept, man, could really change the game. And I hope people
It could be a
listen to this,
cornerstone.
bro. Like
A
literally,
cornerstone for all that to happen.
literally.
Wow.
Because the other thing is, imagine from your congregation growing, Your children don't have to go out to find a job. Your children go out there and become modern, up to date with modern technology and skills, and they bring that back to the church. Where at that point, a church could become just as fancy. I live in Silicon Valley. A church could be considered just as fancy as Google or Facebook, because what the saying is, once you work for Google, you ain't gonna want to work for nobody else. Why? Because Google has implemented health, wellness, food, laundry, family day, everything that you think you would need, they have it on campus, so you don't need to go. Why do they do that? Because they say productivity will be up if you're happy and everything you need is satisfied and taken care of. The same concept could be for the church.
Yep.
Yeah.
But anyway, so that's my thought, y'all.
Boy, let me tell you, man.
You just debunked all of the pulpit hustling out here,
Yeah, for
that's
sure,
the perspective we needed, man. That's golden, man. That's some major stuff, some major key. You literally hit, doing everything you're saying right now, because anyone who's listening to this or is watching this definitely will think different, because if we are where we are today, it's because of behaviors from the past 3, 5, 10, 20, 30, 50 years. That's what make us where we have us where we are today. So if you want a different outcome, then we must start looking into different strategies to be better.
Correct.
Which will be uncomfortable, which would be a little bit funny, which would be a little bit skeptical. At the end of the day, man, we have to do something. So I truly appreciate the way you layer down everything, especially when it comes to this, to the religious aspect of things. And hopefully a preacher or pastor or somebody in the congregation or somebody's congregation is watching this and like, you know what? I'm going to share this with I'm going to share it with my pastor. I'm going to share this with the group leader, with the team leader, see what they say. So share this with them and then watch it together and elaborate on there. You need question? Call him and ask him question. Connect with us. We're going to actually help you through the process, because if we don't start thinking outside the box, like Hasani said, especially when he definitely layered these things, you're looking at his hashtag right now. Hit him up, call him, email him, follow him, whatever you got to do, just do it. Just don't stand there and then just watch this as just good content. You're not doing anything, right? Just
get on his busy schedule.
Exactly. Exactly.
I know the schedule has been going crazy, man. Just watching the growth has been amazing, honestly. And I love the content you're putting out, and it's all genuine over here, bro. Like, usually people look at it, be like, competing and hating and all of that. That's not what it is over here, because your content is valuable, and these are things that we're already insurance agents. And, going through the process of the infinite banking and IULs and studying that. So the education and things are there, but how you breaking it down to our community, man, I haven't seen anybody do it like you. I've seen other people do whole life, but not the IULs, the way you break it down, even getting into the laws and debunking all of the myths. So we truly appreciate you being on here, and it's good to have you even still at an early stage, because I already see 100,000 followers in the next 5 to 6 months already.
Easy, man. The way this thing going,
I don't even know how we're gonna get in contact with them again, bro. But it's gonna be crazy. It's gonna be crazy. I already see it coming. Just how fast it grew from the month of February. I know you've seen it too. Like,
yeah. Well, I didn't realize. I've been seeing it, but I didn't realize it was that much in that short amount of time. Man. Because when you said February, I was like, no.
Bro, I followed you in the beginning of February.
And then I started thinking, I was like, whoa. So now I'm going to have to go back and look like, I still haven't soaked it in yet. I didn't even realize it's been that fast. Didn't even realize it.
The word is spreading fast because you're using the reels and you're breaking it down on the reels. People share it, and I'm sharing it. Other people sharing it because it makes sense. You know what I'm saying?
Yeah.
You're debunking everything. You're talking on religion, organizations. You're talking on different concepts and why you wouldn't qualify for this, and that's what's catching. You throw comedy in there as well. That's easier to relate to our community when it comes, especially to digest this type of information. then you probably get people be like, oh my God, well, how do I do it? And they want to just jump right in, but they don't have those saving habits. And let's rewind it back a little bit, guys.
Yep.
So it is dope, man. We truly appreciate you, honestly, for taking the time out tonight.
No, I appreciate being asked to come on the podcast. And like I was telling you, bro, that the fact that we have other agents that want to do right by clients, I can't hate. I'm here to build bridges, and to be honest, man, we just need more of us out here to help the community because there's not enough.
Right.
You know what I'm saying? There's not enough. So the more that we can build bridges to create more of these relationships so that more of us can do that, I'm all for it. I'm all for it.
100%, man. You know what? I sense the perspective of unity in the industry, you know, because you're looking at 3 young men in the same industry, and we get to sit together and really bring value to the community. So if we work together like that, that's just what I'm saying. If we have the ability to work together like that, I think we would be able to help more people in a very genuine way, where we can bring, I think it would be just great to bring that culture. It doesn't matter if you East Side, West Side, or if you're in a different company and whatnot, as long we wear the same uniform to just bring financial literacy to the people, that's all that matters, man. So once again, we appreciate you. We appreciate the time you spend with us, and I look forward when you have 1 million subscribers and followers. You're gonna be right here again, bro.
We gotta get you back.
We gotta get them right back.
I'll make sure of it, brother. I'll make sure of it. One thing I would like to argue that I'm good at. I don't forget where I came from, and I don't forget people that helped me along my way. This is help. I've been from this too. I've learned a lot just by sitting here with y'all. So I appreciate this. I appreciate it, man.
Awesome, right, man. We appreciate it. Yeah, but anything you want to leave the people? I know you dropped the IG, how to reach out to you, you know, just your call to action or anything like that.
See, I'm glad you said that because I totally forgot, man. So one of the things I'm doing is in reference to the religious bank, I have a free PDF that you could download just to get a better understanding of that concept, right? So that you could digest it a little bit better. It's free. I also have a free do-it-yourself infinite bank audit guide. So if you already have a policy and you have a whole life or an index universal life, chances are it may not be an infinite bank. So I have a step-by-step process for you to look at how can you find out if it's made for infinite bank and how to convert it into an infinite bank. So you don't even have to call me. You can just get the free PDF that we have, and it outlines all that for you. From there, everything else that you might want, that you might like, it's like we have an ebook, but that's a paid ebook. It's called Spend the Same Dollar Twice. I'm going to be making some revisions to it just to make sure we add in more value to the content. But yeah, man, that's what we got so far. That's what I would say. That's my call to action. Click the link in the bio and see if you could dive in and chew on some of that free information. And if nothing else, follow.
Absolutely.
100%.
All right, y'all.
Yes, sir.
All right, everybody.
Appreciate it. Y'all have a good one. Thank you for another week, another episode. Agent and Broker Podcast, Infinite Banking with Hasani Houston. And we out.
Yes, sir. Peace and blessings.
Right. Deuces.
The agent and the broker put you on the right path. And if it ain't adding up, then do the right math. And when you wanna come up, some might laugh. But them be the types to be the overnight staff. Always be your worker. We tryna be some owners. Sometimes might strike out, sometimes we hitting homers. But one thing's for sure, when the money gets uncovered, hit the agent and the broker. Say thank you to my brothers.